Good afternoon. I'm going to do a brief technical synopsis of Compound, ticker symbol COMP. I'm going to begin by looking at the weekly chart and the instructiveness of the 2020 high-end price action during the corrective process. You'll note that during the crash in May that we did undercut it slightly before rebounding. We once again undercut it in early June, middle of June, both times closing back above. And then we finally had it close below, and that was where you shook out the weak holders, and we almost closed back above again. But it was met with an emphatic 72% gain the next week, taking it back above the 2020 high, but also back above the 50-week simple moving average. You can also see the 50-week simple moving average played a role these 2 weeks where we closed back above. And then here we have in the pullback in July, we had a test of the 50-week simple moving average once again, and it was successful, and we had since launched higher. On the daily chart, you can see here we broke the downtrend of the correction at the end of June. It was an 80% decline. We rose here into above the 200-day simple moving average, where we went into another corrective process here, which has shaped a cup pattern. The measured move of the cup pattern is about 43%, which takes us up to a price target of 774, which is a respectable gain. And you can see again the role of the 2020 high. One of the things that stands out for me here, though, and it is a bit of a concern, is yes, we do have the lowest reading on the Bollinger Band width since the trading began last year. So obviously we had the price compression that's needed, and we saw the bounce yesterday, or rally yesterday, of about 17% from that tight price action. One of the problems is now, though, is we're getting close to 70 reading on the RSI, daily RSI, which is interesting because this is cryptocurrency is a little bit different than other ones in the sense that it doesn't really push too much beyond the 70-point level on the RSI. You'll see here, we came there in July and we corrected. We came close again here, we corrected, came up here again, corrected, again here, corrected. And you can see it even farther out going down into December, correction, again, correction. So the impulsive move that we've seen out of the Bollinger, or out of the compressed price action here is something that has taken the RSI to an almost an overbought condition, which does make me wonder whether we're going to be triggering this cup base anytime sooner or not. I think if we see some more strength going into the end of today's trading session, it's going to be very close to that reading, and it may signal a pullback of this move up the right side of the cup base. Otherwise, we should trigger the cup base moving forward if there's some type of consolidation and assume higher prices moving forward. On the downside, really, it's critical. If you bought out of this little horizontal channel yesterday, which would have been a timely entry price, particularly with the close above the 200-day, I would not let it go any lower than a daily close below today's low, which is 423. That would expose it to a test of the 50-day simple moving average, which is at 367, and possibly lower levels, maybe to the July low we see here at 307. So as long as we stay above today's low on a daily closing basis, there should be upside potential in comp, and look for a breakout here above the handle high, which is at 539, and then we make a move to 774 from there.